sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm going to be going over some updates for Bitcoin. Let's go ahead and get it started here on this weekly chart. First off is the Bollinger Bands. If we look down here at this indicator, we can see pointed out each of these vertical lines, pink, green, and blue, lining up the top three most tightened up, squeezed up periods in Bitcoin's price. The pink and the turquoise are more similar in terms of how them being basically at 0.18, whereas the green was at 0.25. If we look here at the price, as I've gone over in the past, drawing similarity between the price harmonics of 2015 to currently, we can see we've seen this initial downside, we see this first M, we see a second M, which lines up with the bear market bottom range. That is exactly, just to redraw it here, we see an initial downside, first M, and then we see our last M right here. It is what lined up with the bear market bottom range for 2014, 2015. Again, we see initial downside, two M's right here, bear market bottom, we break out of our macro pattern. We can see each of these three macro patterns on here, these black trend lines. If we look at the 2018, this one was bearish. It led into the final dump when we again for the first time saw the pink vector candles printed. There is another similarity between the pink and the blue, using these as arguments for why we're likely to see bullish behavior after this rather than seeing bearish behavior, which is, you know, obviously it's possible because this is what did happen in 2018, but the fact that we have printed our pink vector candles right here, we've broken out of a macro pattern. It is similar on this indicator down here to 2015. To me, I feel like it's pretty evident that it's more likely to continue to break towards the upside overall. At the very least, it's not going to set a new absolute low, basically, to essentially say that the bear market actually has not been over this entire time. Outside of that, if we do zoom in here, we can see that the median line of this Bollinger Band is yellow line, going all the way back to, once we finally broke it back here in January 2023 to begin this uptrend, March of 2023, June of 2023, and now currently our third time. You can see each time we came down, we have been finding this median line as support. So if we close below that and then subsequently open below this and then continue to move below 25,000, after that looking at roughly $23,000 approximately, 22.5. I was mentioning those values probably over a month ago at this point. Those are definitely still on the table, especially, and it's only if we end up continuing to blow through 28.5 thousand more than we have so far. If we look at this 4-hour chart, we see this 9-month approximately uptrend, these black dotted lines. If we take a look at this RVI down here, each of these white bubbles lines up with the when the RVI broke below the lower bound completely. If we look at this just within the specific context of this uptrend, we can see that, zooming in on the first one right here, we saw pink vector candles printed. This is when we began this uptrend. We go to our second one right here, pink vector candles began. We found support for the second time. We also found pink vector candles right here, but we weren't as oversold on the RVI. And then right here currently, we are breaking below this support a little bit. Again, RVI, similar to the other ones I pointed out. We could be seeing some sort of a fake out, some sort of a bear trap. We are, to zoom back in here real quick, we are finding support so far along the what was resistance. We've broken out of this falling wedge pattern that I pointed out in recent videos. Finding support along this will be great. Ultimately, finding support along what this support was. So, I mean, basically 28,000 is the first value to be looking out for here. Again, 25,000, that lines up with this low right here that I pointed out. The most recent, besides our current test in support of this uptrend we have been seeing. And then, like I was saying, 22 to 23,000. This lines up with this area right in here. I was looking at this, and I have been looking at this pattern right here, like as a megaphone. We broke out of it, came out and retested. Basically, we're just been stagnating so far. So, I mean, there's still total possibility that we see a retest down here and ultimately just end up bouncing back up and just doing something along those lines, continuing just to move towards the upside. But to go back to this weekly, to kind of tie all this back in, like I said, 28.5 thousand, we're pushing that right now. If we continue to lose that, we'll likely end up closing below this. If we then subsequently open below the median yellow line, then lose 25,000, 22 to 23,000 is to look out for, and then 20,000 is bottom of the barrel. As I have been saying, I do think as long as 20,000 is held, bullish behavior should continue to be printed. Whether or not we get the blue pattern that we see on here, this fractal pattern, that is what I currently still lean towards due to my phase cycle theory and just what I personally see in terms of Bitcoin and analyzing its entire history. But if we do end up closing below this median line once more, I will start to lose that as my bias, and will begin to more so think that we are actually going to see some sort of a stagnation into the halving and then top out more towards sometime around 2025 rather than next year, which is what would line up with this blue pattern that is on the chart. In form of stagnation into the halving, it could happen something like the pink path, which this pink path I took from this pink line. That's why it's pink, and the green one is green because it's what happened after the second time these Bollinger Bands were very tight in terms of those top 3 times. So I just copied both of these patterns because there's correlation between these Bollinger Bands being squeezed up like this in its history. So we could either, as I was saying, see some sort of stagnation into the halving, slowly moving up, or we could see some stagnation into the halving, moving down like the green pattern. This green pattern ultimately does hold 20,000. We would basically see something similar to the W that we saw back here leading into the $64,000 high that we recently saw during the previous bull market. Although the green path that we see on here is what a lot of people really seem to be entertaining right now. It seems that generally kind of seems to be the consensus of most likely when it comes to looking at the broad communities, obviously for fun projections of what's going to happen, because obviously no one knows what is going to happen. I don't know what is going to happen by any means, and none of this is financial advice. But the fact that a lot of people seem to think that we're going to see something similar to some sort of March crash, whether or not it's as brutal as that was, some sort of stagnation basically into the halving. And also, again, another reason why I don't think we're going to see that, on top of the fact that seems to be the consensus of the community. Typically things that everyone thinks is going to happen doesn't end up actually happening. And out of all these 3 types of patterns that I see possibly happening, this blue path, which again is the one I'm currently leaning to, I see less, is the least entertained. So another reason why I lean towards that. But also, I feel like the biggest argument is the fact that everybody has seemed to become complacent, used to the fact that every single time there is a halving, that it is basically a bull run indicator. As I've explained it in the past, the halving is a static function. It happens every single 4 years so far. There's no change of frequency so far, at least, and there's really no reason for it to happen. It's just happening and going to continue to happen every 4 years. So when you overlay something that is static over top of something that is dynamic, like the price of Bitcoin, and by dynamic, what I mean is the fact that the cycles of Bitcoin are lengthening, and the phases within are lengthening. The bull markets are becoming less bullish. The bear markets are becoming less bearish. When you overlay something dynamic on top of something that is static, when you see these lengthening of cycles, eventually at some point, the halving is not going to line up with a bullish indicator because it's overlaid on top of something that is dynamic. Hopefully that's pretty self-explanatory. Hopefully it's not something too hard for you all to grasp. But outside of that, really, that was mostly all that I wanted to go over. Again, just to broadly sum everything up, 28.5 thousand, we're still hanging in a little bit there. We lose 25,000, 23 to 22,000, and then bottom of the barrel 20,000. And then in terms of the all-time high, it really seems to, all the evidence really points to the fact that, I mean, Bitcoin really shouldn't top out wherever it's going to go. It seems that around 150 to 300,000 seems to be the broad range that it's likely going to go to. It doesn't seem like that's going to happen any later than 2025, whichever route does end up being taken. But outside of that, again, that was all that I wanted to go over in this video. So hopefully you enjoyed. Again, none of this is financial advice. Do your own research, come to your own financial decisions, and by no means make a financial investment based upon someone's opinion, some random person's opinion on the internet. But hopefully you guys enjoyed, and I hope you all have a blessed day.